NVIDIA's story in 2026 is extraordinary, and it is about dominance, scale, and timing. One company is sitting on more than $500 billion in confirmed AI orders, and that company is NVIDIA. This is not hype, and it is not speculation. This is reality, backed by data and results. NVIDIA is not just riding the AI wave, it is actively building it and shaping the artificial intelligence revolution itself. Currently, NVIDIA trades near $189 per share, with a market capitalization of approximately $4.6 trillion, making it one of the most valuable companies in history. Revenue over the past 12 months is nearly $187 billion, while profit margins exceed 53%, levels few companies can reach. Despite these results, the stock has paused, trading roughly 11% below its peak. Investors await the company's most critical product transition. That transition is from the Hopper generation to the groundbreaking Blackwell architecture, which is far more than a simple upgrade. Blackwell represents a complete redesign of AI computing, delivering performance and efficiency on a scale never seen before. Each Blackwell GPU contains 208 billion transistors and features a dual-die architecture capable of transferring 10 terabytes of data per second. Its performance reaches 20 petaflops, roughly 5 times faster than the previous generation, making it the most powerful AI accelerator on the market today. When deployed in NVIDIA's GB200 NVL72 systems, 72 GPUs work together as a unified AI supercomputer, delivering over 1.4 exaflops of inference performance. At this scale, we are no longer talking about individual chips, we are talking about AI factories that produce intelligence at industrial scale. Demand for these systems is extreme and global, with CEO Jensen Huang describing it as off the charts. Orders exceed 3.6 million units, and all 2025 production was sold out well before the end of the year. Cloud providers dominate allocations, including Microsoft, Amazon, Google, Oracle, and Meta, while AI-focused startups are competing for capacity and paying premiums to secure access. So why isn't NVIDIA's stock trading even higher than it is now? The answer lies in supply constraints. Manufacturing these advanced GPUs is complex, and packaging capacity at TSMC is limited, while thermal designs have slowed deployment. Power is another major constraint, because these rack-scale systems consume hundreds of megawatts, and some data centers are not yet capable of handling that load. Memory supply remains tight, with high-bandwidth memory in short supply and rising in cost. Experts expect these constraints to persist into mid-2026, but hyperscalers are responding by investing in on-site power generation to accelerate deployment. Despite these limitations, NVIDIA's financial performance continues to break records. Quarterly revenue recently reached $57 billion, with year-over-year growth exceeding 60%, and guidance for the next quarter points to $65 billion. Blackwell alone contributed $11 billion in its first quarter, with data center revenue now representing the majority of NVIDIA's total revenue. Full-year revenue for fiscal 2026 is projected at $213 billion, with fiscal 2027 estimates approaching $316 billion, while earnings per share growth remains above 50% annually. The company's backlog is not fixed. It has the potential to expand even further as demand continues to grow. Then came a significant catalyst: China. U.S. authorities approved sales of H200 chips to Chinese customers, generating orders exceeding 2 million units for 2026, with revenue potential exceeding $40 billion and shipments set to begin mid-year. China previously represented 13% of NVIDIA's revenue, and now that market is reopening, creating a significant growth opportunity that analysts believe is not yet reflected in the stock price. At CES 2026, NVIDIA made it clear that it is moving beyond GPUs into a broader AI infrastructure ecosystem. DLSS 4.5 was unveiled, capable of generating 5 AI frames for every traditionally rendered frame, while G-Sync Pulsar pushed motion clarity beyond 1000 Hz. In robotics, NVIDIA introduced Cosmos and Groot models, alongside the Jetson T4000 module that delivers 4 times greater energy efficiency than previous generations. Autonomous driving systems were enhanced with Alpamayo 1, a 10 billion parameter AI model, supported by closed-loop simulation for faster learning and deployment. Then came the announcement that matters most for NVIDIA's future: Vera Rubin. Vera Rubin is a new platform scheduled for launch in the second half of 2026, built on a 3-nanometer process, combining Vera CPU and Rubin GPU. It will surpass Blackwell and reset industry performance standards once again. This is NVIDIA's core advantage: speed, consistency, and an annual cadence of innovation that keeps competitors perpetually behind. The company moves fast while competitors struggle to catch up. Market share remains above 85%, but the true moat is the ecosystem, not just hardware. CUDA locks developers in, Omniverse enables large-scale simulation, and NVIDIA's robotics and inference microservices generate recurring revenue. By the time rivals reach Blackwell performance, NVIDIA will already be shipping Vera Rubin, and the next platform will follow shortly after. Wall Street has taken notice, with most analysts rating NVIDIA as a buy or strong buy, and average price targets exceeding $250, while some go above $350. AI spending continues to accelerate, yet adoption is still in its early stages, with only 3% of U.S. companies using AI today. That percentage is expected to grow rapidly, driving massive demand for NVIDIA's infrastructure. Of course, risks remain. Growth will slow from the triple-digit rates of the past few years, and margins may face pressure from rising input costs. Competition from AMD, hyperscaler custom chips, and open-source alternatives will increase, while geopolitical uncertainty could affect international sales. Execution will need to remain flawless, but NVIDIA's foundation is stronger than ever. The company is no longer just a GPU manufacturer. It is full-stack AI infrastructure, powering robotics, autonomy, scientific discovery, and enterprise intelligence. It sells hardware and software, while also creating recurring revenue through inference microservices, ensuring long-term stability and growth. A base case scenario predicts NVIDIA shares reaching $220 to $250, while bull case scenarios could take it significantly higher. The trend is clear. Artificial intelligence is not coming, it is here, and NVIDIA is building the foundation. It is shaping the future, powering the AI era, and redefining the rules of technology and innovation. NVIDIA is not just participating in the AI revolution, it is creating it, leading it, and ensuring it has a profound impact on every industry it touches.